Every day of our lives, we're on the verge of making those slight changes that would make all the difference. Mignon McLaughlin. My friends, each and every day, if you'll just devote those 10 to 15 minutes of following the stock charts, practice trading, tuning into the show, and again, learning the nuances of your favorite stocks and ETFs, and of course, the 5 that we follow each and every day. The S&P 500, the NASDAQ 100, 20-year bonds, gold, and the Bitcoin ETF HODL. What a great place to start and even end up. That's about all I trade these days. And again, find your favorite ones. If you're in a particular industry that you have a good feel for, then find 1 or 2 stocks in there or a sector fund. Again, indexes, sectors. If you're into commodities, you can find ETFs that track virtually everything. And what are you looking for? You're looking for stocks and ETFs that are trackable. That is, you have consistent weekly vertical crossovers where it moves consistently up, maybe consistently down, maybe just one moves in one direction consistently. Things will change. You'll also find ETFs and stocks that work in a particular time frame very well. You'll find some that work for a while and then stop working. So again, it takes your daily attention. Not a lot of time. You will burn yourself out if you go home every night and spend 2 hours pouring through the stock market. It'll be fun at first, then it will become drudgery, then you will dread it, and then you will just quit. So 10 to 15 minutes, dedicate yourself to that. Let's jump into these charts. This is a day where everything is down except gold. Let's jump first into the S&P 500 like we almost always do. Now we are seeing our directional probability remaining about the same, backtest accuracy about the same. We are bullish on the S&P, and it was about flat today, down 0.03%, which is just about flat. Again, we can see for the last day and a half, we've been about there. Again, we're looking at the weekly. We've already got, just 2 days in, we're fine on the volume. The half day represents Tuesday and Wednesday, so it'll finish closing tomorrow. We'll see if we'll get up to half there. You can see where we've reached. Let's see, the prior high was 619.22. This high, 618.83. See, it's worth comparing. We've not quite reached the prior high on this latest candle, so we will keep an eye on things as we move into the second day of the charts. Now again, we're looking at where things closed as far as our percentages go. We can have days where the market goes down, but it actually ranges up higher than it had before. Nice thing about the Heikin-Ashi candlesticks, I'm going to put that at the end of today's training. For those of you who haven't taken our Heikin-Ashi training before, our original one, we have several 100,000 views of that, and I don't even know how many hundreds of likes. But the latest one that I recorded a year or 2 ago is the best. And I'm going to make myself a note right here to make sure that I share Heikin-Ashi training with you. You will get a great deal out of it if you haven't taken it before. And of course, in my latest book, 3-Wave Trading Advantage, we've got 2 chapters on Japanese candlesticks. One on the traditional and one, maybe 2 more on the Heikin-Ashi that you'll get a great deal out of because it's such a large part of what we do. If you don't have my book, how do you get it? You become Patreon supporter into the 3 levels and you immediately get sent a copy. So let's jump into these charts further. That is where we are on the S&P. Now the NASDAQ pulled back, excuse me, NASDAQ pulled back a little bit more, 0.84%. You can see down in the morning, doesn't look like it was quite as much down in the afternoon. We have reached a higher high this week on the weekly chart. We can see this latest 2-day has not. Volume's okay, but this red volume means what? It opened lower than the prior close. We're still above the weekly trend line on both the half day and the 2-day. And we are seeing our Backtest accuracy and directional probability on the trade execution summary grid. For those of you not familiar, the trade execution summary grid we produce on a daily basis. We share it with our Patreon members. We release it the following day to everyone else. If you want the most updated version, consider becoming a Patreon supporter at any of the 3 levels. Now, we are staying about the same. Backtest accuracy is up to a little bit. Our bullishness, we are still barely bullish. And again, we have been bullish for many, 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 many weeks as things have just continued to climb higher and higher and higher. Pushing through what last week, 2 weeks ago, no, last week, pushing through the prior high on the NASDAQ 100 and also on the S&P 500. We've taken those old horizontal lines away. Let's go to 20-year U.S. government bonds. They're pulling back just barely, 0.12%. And we are sideways to bullish. Again, not a high probability there, not a high backtest accuracy. Of course, our entry and exit dollar points are listed in the trade execution summary grid along with the expected movement. So we are continuing to be, and I've actually been more bullish than our numbers that we run each and every day for you have been. And of course, things have just continued to climb higher. Candles getting bigger. Volume, we'll see if we hit average volume. We're well on our way to doing that. And hopefully we'll see 20-year U.S. government bonds continue to climb. Now, gold. Gold, we are still bullish on gold. It was up for the day, 0.89%. That is what our numbers are telling us, even though we have 2 weeks of down movement in gold. Now, you've heard me say over and over, when I see the substantial break in the upline that we had and then 2 weeks of down movement, we are more than a coin toss bullish on gold. I don't feel that way. Again, it was up for the day. We are just sitting there below that trend line on both the 2-day, trying to push through, and the half-day is sitting right there below it. And again, I'm not bullish on it. Numbers are telling me to be bullish, but I am very cautious. And again, what do you do when you're running the numbers, you're looking at the charts, the math's telling you one thing, and you're feeling another? I either go with my heart and what the charts have told me and what I've learned over the years, or I do nothing. And again, I tend to do nothing if I don't have a sure thing. I want 75, 80, 85% backtest accuracy. In fact, a good rule is 80% directional probability, 70 to 85% backtest accuracy. That makes me feel good. When it gets short of that, if I'm in a position, I may very well let it continue to run, but I'm not going to be entering a position at much less than any of those things unless I have charts that I have traded for years and I feel certain that I know exactly what is going on. I have to have a good story. Lastly, we will look at HODL. We are 50-50 here, sideways to bearish. We had 2 weeks of down movement the last 2 weeks. This week, trying to move up, push through a very weak trend line that I don't put a lot into. We have a red spinning top for this latest one, Bitcoin down 2.10%. We're above that trend line on the 2-day and the half-day. And again, it's a weak week. So again, I'm not trading anything based upon charts like that when it comes to Bitcoin. That is where we are, my friends. Always appreciate you being with us. So thank you for those who are Patreon supporters. If you're not getting our daily email and you would like to receive the daily training that we put out, you would like to get the setups that we do, linked to the kind of charts that we run, you would like to get the video on a daily basis in your email, we never spam or sell that list. That list is free to sign up for at chartingwealth.com. You'll also see the link there to our Patreon page if you want to become a Patreon supporter. God bless, my friends. All the best from the whole team at Charting Wealth, and let us hear from you. CW, at chartingwealth.com.